Here is a quick way to get a trade opportunity using institutional confluences. Emphasis on institutional confluences because you are a retail trader. So ideally, your small money cannot move the market. But when you trade along with the people that have big money in the market, you can always fly as much as you want. At least 70% of time, you'll be winning some trades. If this is your first time of coming across this channel, I urge you to, hit the subscribe button and maybe turn on your notification bell. Maybe some other times I share something valuable, you can get to see it on your timeline. And also do well to share to others if you find value. This is not a beginner class, so if you don't know what some things are, I don't expect you to be here on this video trying to make use of it to go and trade. So this is probably for those who already understand their basics. You know what liquidity is, you know what structure is, you know what entry, discipline, psychology, exit, you know what all those are. But now you are looking for how to get the right opportunity. So this video is for you. So now there are a few things I look out for. The first thing is structure, then followed by liquidity, opportunity, entry, exit, and then discipline. These factors I listed are very, very vital for me. They are what I observe, and then when I take my trade, I know I have ticked all the boxes. So quick one, when it comes to structure, what do I use to find out what the market is telling me? Structure is simply what is the direction of the market. If you're not following the major direction of the market, you are on your own. And most of the trades you're going to be taking are going to be hitting losses because you are trading against the market. So whatever you do in the market, do not trade against the market. One, I use the 4-hour time frame to get my structure direction. And this is on AUD card. So let's move to the 4-hour time frame. So as you can see now, this is a 4-hour time frame. This is my 4 hours time frame. Now, what is the market doing? And please, whenever you are analyzing, don't be too quick. Do not be too quick to exit. Look at the chart very well. That's why we call it technical analysis. It's technical because you have to work with your eyes. You don't close your eyes and be analyzing. You don't close your eyes and spot a good opportunity. You simply look at the chart. The chart is what is telling you what is happening with the currencies in different countries. The reflection is what you are seeing on the chart. So you have to pay a very good attention. Don't be looking at the chart in a hurry. Don't look at the chart when you are hungry and you will not be able to spell out what is happening. Simply go to the chart when you know your concentration is at least optimal. So quick one, this is on the 4-hour time frame. Now, by looking at it, you don't have to be scrolling. Whenever you come to your 4-hour time frame, simply locate the last swing. What do I mean by the last swing? What is the last thing the market is doing? Now, when you come here first now, the first thing I can spot here is a breakout structure. We have a breakout structure around here. That is it. We have a break of structure around here. And then if you take note of something, let me increase this. If you take note of something around here, you will see the market is something. The market was previously moving up. Market was moving up here, and there was a little retracement down. Then went up again to give us this higher high, and then coming down, we saw that it swept this particular higher low here before eventually moving up. So now this is a kind of liquidity sweep around here before markets now moved up. This is the distribution area. And then whenever you have something like distribution in the market, you look out to join the market at a very good area, whether a fair value gap, or maybe you see a change of character and you decide to enter, or immediately you spotted the liquidity soup around here, you join the market. Or better still, the last option, wait for market to come back and retest. 70% of time, there is always, a retest opportunity. So now, when looking at this chart now, we already have a trade opportunity here. The market is simply bullish. Without you even, the market is bullish because we have already seen our swing. We have a break of structure here. And then this is our higher low. This is our higher high. This is the last high that market printed. And this is going to be serving as buy side liquidity area because now we are intending to buy, and whenever we take any trade around here, we expect market to do what? Take out this particular high it has printed before. So that's why we call it the buy side liquidity. Buy side liquidity because it is an area of liquidity pool we expect market to take out along the line. So let me clear all this rubbish. Now, this is what we have now here. Where is our trade opportunity? Now we have already determined the structure. Let's go back to our list. What's the next thing? The liquidity. Don't forget, I already said I spot there is a liquidity already here. And where is it? We said there is a sweep. Is a sweep. So market swept the higher low that was previously formed, and then it gave us this higher low again. So this is a previous higher low that was swept before giving us this particular one here. So that gives us a liquidity sweep. This liquidity sweep already makes the zone, the area, to be very, very, protected. Because first thing is, if you can't spot where the liquidity is in the market is going to use you as a liquidity. In a layman's language, it simply means you have to, provide something for the market to be able to spare you to stay. So if you're not giving the market liquidity to use and, hold as a kind of restriction, you will not be protected. So you have to spot a liquidity in the market so that your zone can be spared. Market simply takes that one you are giving it and then leave you alone and run. So far you are obeying the market direction. So now we have spotted our liquidity, and then don't forget again, around here, see here, a single bottom liquidity, because when market was reversing back, we are seeing the pullback, and there's a little pullback like this to print a very small higher high, lower high, then prints a very small lower low, and then went up again, and market is currently here. So here now is a kind of another liquidity, and we can call it a single bottom liquidity. So market is definitely approaching very, very good. So now what's the next thing we can see again now? Let's go back to our list. What's wrong? So now going back to the list, we have spotted the structure, we have spotted the liquidity. So what's the next thing in line? The next thing in line is the opportunity, the entry, and the exits. So now let's go back. Opportunity, entry, and then exits. So now looking at this chart, having spotted the direction, spotted the liquidity, where is our trade opportunity? Where is our trade opportunity? So for me, the candle that prints in the market has a lot of information for you. The candle that prints in the market has a lot of information for you. A candle with a full body has information it is carrying. A candle with ordinary wick has an information it is carrying. A candle that says it is a pin bar, it is a bearish pin bar or a bullish pin bar, has an information it carries. And one of the most important candle patterns I like so much is the pin bars, whether bullish or bearish pin bars. They carry a whole lot of information. Now, when looking at this chart here, we had a pin bar here, a bullish pin bar that occurred, which means the buyers and sellers entered the market, but the buyers were able to overpower the sellers and they took the market off. That was what we saw. And now this is a kind of massive distribution. So we are looking at trading a retest of it. So when looking at this candle here already, we see that the price action that occurred was very little. And that's why that pin bar occurred. So the whole lot of this week is a trade opportunity. This weak area is a massive trade opportunity. Looking at trading as a retest, that's our opportunity area. For me, that's my kind of style of trading. That's how I've studied and observed the market. Markets always come back to rebalance prices. It does not leave any gap, it does not leave any space. Even if there is a heavy slippage, markets still find it balance prices. So that's how to observe and study the market. It doesn't have to obviously be a demand zone or supply zone. There are other things that market does to keep moving. So let me go ahead and mark it very well. Then we'll mark it out. So all this area now, and then you leave a few pips downwards. That's how I trade. So all this area is my opportunity to trade and continue the bullish market. Now, before we talk about our entry, we'll move to the lower time frame to see if the zone is going to be minimized, or better still, you can leave your trade like this. Or whenever the market triggers, you can see this is a live market still running. There is no playback, no replay. We will be doing this, and when the result plays out, I will make the second video to show us how the AUD card we analyze finally played out. So now, market has not yet triggered, but there are several ways you can enter the market. You can choose to leave it like this, place your long position. We've already taken the 50%, so that's ideal enough. That's our long position. And now let's just quickly do everything here. Where is our exit? Because whenever you're entering the market, you should have a place you'll be moving out. You are not going to be there forever. So where is our technical TP? So now your technical TP is exactly the immediate liquidity pool after the break of structure. The immediate liquidity pool after the break of structure, which is the buy side liquidity. Don't forget the buy side liquidity. So now we already seen where our break of structure is. Where is the first high that was created before the reversal was done? Now look at the chart very well. We want to spot our first high. So this was the first pullback, and then we had this like this. So now the pullback came. So the first pullback after this break of structure is around here, which is our buy side liquidity, and obviously the last high the market printed. So here is our technical TP. So for me, I don't place my TP exactly to be parallel with the higher high. I make sure it is few pips before, so that because sometimes market might not really take out so good, and sometimes market will take out massively. But then to be on the safer side, just place your TP few pips before the immediate high after your break of structure. So now I'm going to extend my long position now, and then keep it around here. You can see where mine is. It's not exactly where the higher high ended. Sorry, I'm going to keep it around here to be on the safer side. And so we have 8 RR. We have almost 8 RL trade here, 8.87 RL. So that's a very nice one. So what are we looking at now? We are expecting market to we expect market to continue selling down and then tag us in and take out this, you know, this buy side liquidity. So that's what we are expecting market to do. And that's how to get a trade opportunity. It's as simple as that. So whenever you open your chart and you can't find anything reasonable, like it's not giving no clarity, no direction, just leave the chart alone. Move to another pay and analyze, or simply wait for when markets will, print reasonable, clarifying moves. So that's how I analyze the market. So by the time this plays out, whether it hits CP or it hits the SL, whatever it is, I'm going to do a second video to show us how it's finally played out. Then the last thing we have on my list is discipline. Now, this discipline is what is going to ensure if you are taking the money will remain in your bank account. So with your discipline, don't forget I said this class is not for total beginners. It is for those who already understand their basics and they're looking at getting better. So when I say discipline, you already know what is involved. You no fear, no overconfidence, no rushing out, no rushing in. Now you've gotten a trade opportunity. Yours is to wait and then risk appropriately. I always encourage, don't risk more than 1% of your account. Don't risk more than 1% to keep safe and to trade longer. And when you get used to this, you will see that it gradually helps you to control greed. It actually helps you to control fear. Because when you risk appropriately, there will be no need to be scared of, not entering the market. Because majorly, most of the things that causes fear is the fact that we are going to lose money. But if you now see it that you are risking appropriately, you can actually let go. You will see that there will be no fear. You will be able to enter that market once you have already analyzed and you are sure what you have is great. So that's how I, merge discipline into my trading lifestyle and trading continues. So that's how to have a very great trading opportunity, guys. So that brings us to the end of this video. So kindly do well to appreciate by subscribing to this channel. This channel is still growing, and if I feel encouraged, I will be supporting others as well with valuable piece and then be publishing here for free. Alternatively, if you want a hand by hand guide, let me use this opportunity to introduce my 6 weeks one-on-one. If you feel you need a hand by hand guide, you can reach out to me via DM. Use the link in my bio, reach out to me, and that's all.